Hi, hope you're having a great day wherever you are, and welcome back for another video. And today I want to talk about four things. One is the expected price action for Bitcoin in the near term. Second, negative interest rates and implication for crypto. Third, the Cambridge newly created Bitcoin electricity consumption index. And lastly, right, is a fun fact on holiday and its expected implication again for crypto. First, let's quickly dive into it. So this is the monthly chart of Bitcoin, right? And you can see, just looking at these charts, we will start with the monthly chart because it's larger time frame, and we just want to see the overall trend first, whether it's uptrend or downtrend. So it looks like, right, even on a higher time frame, which is like monthly, we are on a very strong uptrend, right? Now, even if you look at weekly, I have drawn some trend line here, right? The red lines here are the most recent weeks, right? Here also we are seeing an rising trend as well. Now coming to daily, which is the most interesting for us to kind of make an estimate of what is expected in the coming weeks or coming days, right? Now, firstly, now, I have drawn some trend lines here and also some Fibonacci level. Fibonacci level is basically all this just price expected of where prices will go, right, in the coming near future. Now, first thing first, right, you can see, right, in the last few days, basically like last 1 week or so, last 1 week to 7 days or 10 days or so, the action, that means the both bull and bear is basically much more decisive, right? They are much stronger wave, much stronger force, and also much more decisive here, But if you look at even last few months ago, since April or so, it's not that strong. So momentum in the last 10 days or so has been really, really strong, right? And that's really where you see it, go up above the 10,000 level, which is a very key psychological level. Now, what is this purple line is something I want to show you, right? Let me just minimize the chart. So this purple line is a very key resistance level, right, of the Bitcoin price in its history, right? Why do I say that? Why do we say that? Especially since the last rally, which is an important event that most people will remember. You see here, a lot of price points, hover around here and very difficult to go up. But when it went up in the December of 2017, right, it really broke through, but it didn't stay there for long, right? It's about 1 month or plus or so, and then it crashes down again, and then it hovers at that resistance level again for some time before it really crashes down and go back, test again, and then couldn't, and then really then crash down to 3,000 level or so, right, in December 2018. Right now, of course, we are seem to be like in a recovery mode. The question is this sustainable, right? Now, you see, if we really look at it now, if you can see, as we have said earlier, if we look at the monthly chart and the weekly chart, the Bitcoin price still on an uptrend. As you can see here, that is true. But if you really look closely again at what is going to happen now, these few days, or in fact today and tomorrow, will be quite a key. These next few days, I think, will be very, very important to see what is going to happen, because now actually you see the prices, right? The strong momentum prices is really hovering around the purple price, which is the key resistance price of about 11,500 level. Yeah, this is a key. See it on June 25th, right? It actually went up. It couldn't. Then the next day it tried again. It went up, hit a high of almost 14,000, right? 13,850. Come back down, right? Closes at 12,100, so 12,200 level roughly. And then the next day it shot back down, right, below the resistance level, back to 10,600. And then the next day again it went back. So it's like it's keep trying to test this level, right? Ping-ponging around this key resistance price of 11,500 level. Now, so what's happening is that, right, of course, on the 2nd of July is when it really it starts to weaken, and it kind of like do a pivoting point, because you see it has dropped. it has dropped to a low of below 10,000, 9,600, right? Before it closes much higher at over 10,000 again, right? And then the next few days, it went back up, but still, right, about 2 days ago, 5th of July, is not sustainable, so it went back down. But what is quite consistent about the last 10 days or so is really the prices are hovering around the resistance level. So, and you can see here, right here, I draw a few trend lines. So you can see it is forming a wedge, right? It's basically a pennant shape. It's trying to decide what to do now, right? And so today is quite key. So the thing is this, if today it seems so far it's been on a downtrend, and if today closes, right, if it hit this blue line, this dark blue first, right? If it hit this blue line, it's still fine. Then we are still waiting for more confirmation for what it plans to do next. But if it really dropped below, right, then we have to see if it will hit the 10,000, very close to 10,000 level. That's really a key resistance to hit. And also a very key psychological level. Why? Because if it does, right, it will actually drop. If it drops below 10,000, then it may hit a low of this level, which is the recent low of 9,555, right? And then it may really start another, bearish trend again. So if it really does that, then the prices may go down further. But to me, again, because I'm a long-term hodler, all this price action is just because people like to hear this kind of things, right? Because people like to know what's going to happen in the near term, even though it's not 100% accurate, but some sort of directional expectation, right? Of course, it's not financial advice, and I don't have a crystal ball, definitely, but just looking at these charts, right? It seemed that is deciding what to do, really. So if it really dropped, then first it need to break through this level, which is the 10,900, 11,000 level. And if it breaks through, then it needs to break the 10,000 level. And if it still breaks through, then it may likely go down to 9,600. And then from there, it may really just start a bearish trend. But if not, right, if it decides to go up, right, so really at this level is where the bear and the bulls are still battling out. And in fact, last 10 days has been really that, and both are very, very strong, so we cannot yet see what's a definitive trend. But so if it goes up, right, it may really it could go up as high as this level, so 12,300 level, or it may even go up as high as close to 14,000 level as well, because it tested at the level about a few days ago, right? So that's the thing, right? So that's the price action we want to talk about. So definitely, what's the implication then? To me, very in summary, really, then we are talking about prices are consolidation. They're deciding what to do. One key reason may be because of the holiday that was July 4th and July 5th. It was 2 days holidays in the US, right? A key market for Bitcoin. A lot of the companies dealing with crypto and Bitcoin are based or headquartered there. So that's why very, very little news as well in the last few days, right? So no surprise why the price action is also trying to decide what to do, because they're still not clear what to do, right? And this brings me to the implication then, right? Regardless, if it really pulls back, to me, being a long-term hodler, I will still, at least for me, what I will do is that I will see it as an opportunity to buy in further, right? If you already have, it's okay to still, buy in a little bit more if you think you're not enough. Of course, if you are satisfied with your allocation, with your amount that you already put in allocated for crypto, Bitcoin, then you're fine, then you're cool. But if you don't have, also any pullback is a good opportunity to enter. But if it goes up, of course, it's very happy, very great news for people who have, right? But anyway, just treat this as a good information if you want to know, right? But I will never really wait for this kind of prices to actually gain entry. You might do this for like day trading, just to get some money from the market, but this shouldn't be a long-term strategy for your Bitcoin, right? For your crypto, yeah? That's really what I think. Again, not financial advice, right? And the second thing that brings me to the holiday, right? We talk about holiday. Now, it is very interesting to note that because it's a July 4th holiday, a big day in the US, Independence, right? The banks and all the offices are closed. But, right, it again bring up the merits and the benefits of Bitcoin, of crypto, that inspired the whole crypto, is that it doesn't rest, right? It's 24/7. Anytime you can just transfer money using Bitcoin, using the other crypto, anytime, even July 4th itself, July 5th, no problem. Anytime you can just do it. So that again brings home the good merits of it, right? With that said, I want to move on to the next topic, which is the negative interest rate. So about a few days ago, right, just in the middle of last week, really, Wall Street Journal reported this article, Negative Interest Rates Benefit the Global Economy, says IMF Chief Christine Lagarde. Now, this article, basically the gist of it, she's saying that negative interest rates has benefited countries like Europe and Japan, right? And they really have their bond yield is basically not yet negative 1%, but it's negative 0 point something percent for all these countries, right? And so by her saying something like this, they are really endorsing the negative interest rates, and the market basically is conditioned to believe that negative interest rates is going to be the new normal. Now, for people who are not super familiar with all these terms, financial terms, negative interest rate, what does it actually mean? Now, this in layman term, it basically means, right? No, so you're probably very familiar with the notion that if you put money in a bank, you will get an additional interest. That's called positive interest. Basically, you put money in the bank, if they give you 10%, of course, no banks will give you 10% now, but let's just make it simple. Let's say 10%. That means but at the end of that 1 year, you know that you're going to get 10% more of your money. Negative interest rates is just the opposite. Basically, if it's negative 10%, it means if you put $1,000 into the bank, they will give you less money at the end of the year. That means you will get only 900 back because they are taking 10% away from you, right? So this is really, really absurd. And, to a lot of people, this shouldn't be normal, right? You should actually start a huge protest, right? Huge outcry. Why, right? Because why do I need to keep my money with you and yet I need to pay you, right? And from the crisis, we all know that the banksters are the one who actually made all the money, right? And a lot of the banks, despite them not doing well, they have been propped up by the government stimulus program, which is really the government injecting capital to, save, to keep them afloat. It's like if you start a company and you are declared bankrupt, you basically have to file for bankruptcy, and then you have to face the consequences, right, of just saving everything back again, right? And that will take years, right? But in the case of the financial crisis in the US and around the world, the banks basically had the help. They were basically saved when they were bankrupt. They were basically saved by the government using taxpayers' money to keep them afloat, and they continue to survive. They didn't even shut down for any one day, right? That just gives you the sense. So why then do we need to even fund them further with negative interest rates? Negative interest rates basically means you are punishing the saver, people who are saving money, because you save into the bank, right? Because if you save a lot of money, normally you put it into the bank because that's generally the safer place, right? And for that security, you have to now pay them interest. You have to pay them to safeguard your money. This is really absurd, right? Now, the other thing is that, of course, who then it will benefit? It will benefit the rich. Why? The rich are really the ones that will borrow money because it's negative interest rates. That means to borrow money that you actually gain if you're borrowing money, you actually get more by borrowing money. That means if you borrow 100, you might even get $110 to fund your project, to fund your investments and so forth, right? And who are the ones who normally will do this? Is people who are rich already, companies, right? Because then they have a lot of projects, a lot of productive opportunities that they can fund and get more money. So what it does, it will just increases the income and wealth inequality even further, right? And the third, of course, is that it increases leverage. It will encourage normal people to even borrow more, to buy like a lot of times unnecessary things, a lot of material things that you could live without, right? For example, you don't need such a big house that will cost like, it will take up, let's say 50% of your monthly income just to service the debt. You don't need that kind of lavish material things, yeah? But because of cheap debt, because it is cheaper for you to borrow money, right? In fact, you are being incentivized because you're getting more money when you borrow money. So you might be tempted then to do senseless things like that, right? Just to spend on unnecessary things. And because of all this, it actually enslaves you because you have to service all these debts continuously. you basically have to work longer, maybe most of the time in jobs that you do not like, yeah, and then that's why you are continuously chained to this system. So all this is really, really bad, and that's why I don't see why is it positive, right? And this is the kind of news articles that is being put out there, yeah. So then what is the implication for crypto, right? So then this problem about negative interest rates is actually because of the fiat money, yeah, because there are too much liquidity, too much fiat paper money lying around. That's why they need to have negative interest rates, and yeah, because if something is rare, is scarce, and you want more of it, you basically have to pay more of it. Now it basically seems that because there are too much of them lying around, right, people rather just pay the banks to keep it, just to have the safe haven, rather than spending it, because there's just too much paper money lying around. And that is then bring to the benefit of why crypto, why Bitcoin, because Bitcoin, crypto is scarce, is limited, and that is really what gives it that additional value, yeah. Next, we look at the Cambridge. They just came out with a Bitcoin electricity consumption index. This is really, really cool, because first of all, the electricity consumption of Bitcoin is a very big controversial topic that is many times being used as an argument against Bitcoin, against crypto overall. The argument is that, right, a lot of people who hate Bitcoin will say that because Bitcoin really need too much electricity just to ensure it survive, right? And so what Cambridge does is really very, very honorable, I think, and this is really perfect, right? Because them having the kind of credentials, the kind of reputation, they are totally in the perfect place to come up with objective, right, and bias-free and independent measurement of whether it is true that Bitcoin consume a lot of electricity or it's not true. So this is a website that you can check out for yourself, right? cbeci.org, and it is updated every 30 seconds, right? And this is the numbers. So what is interesting is the comparison, because that really drives home the point. Now they look at total world production and consumption, and in the left here you can see total electricity production is that Bitcoin uses only 0.25% of total electricity production in the world and 0.28% of total electricity consumption in the world. So if you look at from that lens, it's actually very little, right? And this is probably also I think is lower than the people who are using Bitcoin today, right? So that's good. So the other thing is total world renewables production. This is a bit high. This basically means solar, wind, and other renewable energy could power the entire Bitcoin network 23 times, yeah? So country ranking, I can't see, unfortunately, but what it means is that some fun facts. Now, the amount of electricity consumed every year by always on by inactive home devices in the US alone could power the Bitcoin network for 4 years. So you see, so forget about just Bitcoin itself, right? There are many, many other ways, many other avenues that people and companies and governments can save electricity, right? So the really point is this. How much is that value worth, right, to power up this this Bitcoin, which is really permissionless, right? It is really censorless. You can't censor it, right? Censor resistant, right? And most importantly, because no one can shut it down. That's the really key, right? And because of that, it is a very sound money in that sense, right? No one can just create it out of thin air, right? No one can just create more and more of it as they please, right? So that is the case with fiat money, and that will continue to devalue the price. But something like this, how much is the electricity worth to actually power it? I think it's very, very important that we power this kind of network, right? Because it gives us this kind of important value, right? So how much is it worth, right? So that's the thing. But what is important, I thought, is this methodology, this index is definitely very cool, and the fact that we have now a Bitcoin electricity consumption index in the let's see, is about 11th year of age of Bitcoin is very, very commendable, because honestly, you know, if you look at it, Bitcoin is not yet even a full-grown adolescent, right? And already it has grown so much, right? It has withstand so many attacks that makes it even more stronger. Everyday survive is sustainable, and from I think it was 2015 onwards, it became more mainstream, and that's when a lot of the people arguing against Bitcoin take the this reason that the Bitcoin uses a lot of energy, so it is very, very energy intensive. It is very, very bad for the environment, right? Trying to use this to brainwash people against adopting Bitcoin, right? But now it's really, really good that we have something like Cambridge University to come up with a very objective measure to measure is it true or not true, right? So with that said, right, so that's all I have for today, and I will speak to you next week, right? And hope you all the best. Hold on, stay strong. Because if you truly understand, so that's what my video now, I want to basically change the direction a bit, right? And also I changed my username to Crypto Queener. So yes, so the thing is this, I want to do two things really, most of my videos going forward, and maybe I will then continue to evolve even more. But basically for now, the direction I'm taking for these videos are, first I'm going to start off with price actions, right? Near term, short term, historical, future. And then we talk about some very interesting news that happened throughout the week, yeah? And that's all I have. Wish you all the best in your crypto journey, right? Hold on. Stay strong if you're a hodler. If you don't have, as I've said, if it were me, if I don't have, I will go in, right? So again, not financial advice, but yeah, just want to leave you on that note. Have a good week ahead, and I speak to you next week. Thank you so much for your time.